In today's video, I want to cover the Very Good Food Company, ticker symbol VERY on the Canadian exchange and VRYYF on the US exchange. I'll break down the article that came out on Friday, future catalysts, and lastly, go over the charts. The Very Good Food Company is taking another step in the right direction. They're graduating to the TSX Venture Exchange as a market open this Wednesday, March the 17th. For anyone already invested, don't worry, you won't need to do anything on your end. It's simply a one-to-one transfer of holdings from the CSE to the venture. Now, if you're wondering, the CSE, or the Canadian Securities Exchange, comprises mostly of penny stocks that are largely disregarded by most investors. It's a microcap exchange with some small cap stocks. I like to think of it like the Wild West. The TSX Venture Exchange, however, is where all the more established startups and small companies are, and it's limited to a very few penny stocks. It's basically a small cap exchange with a total market cap of $45 billion. So, with Very graduating to the venture, it makes the stock more accessible to more investors, since not everyone can buy and sell CSE or even over-the-counter tickers through their brokers that easily. Ultimately though, I'd like to see this on the TSX and the NASDAQ. Now, the TSX is where all the big blue chip stocks are and what Bay Street really pays attention to. This includes all mid-cap and big-cap stocks. It's the 8th largest exchange in the world with a total market cap of $3.1 billion. To be honest, you won't ever really see big institutional investors looking at the CSE or the venture. They're paying attention to the TSX. So in short, the bigger the exchange, the more established the company. Now, coming back to the article, this is what I wanted to see, an update from the CEO regarding the facilities. Here's a quick rundown of the 3 facilities. The Mount Pleasant facility in Victoria is located in a high-density, pedestrian-friendly area. They have strategically shifted its use mainly for R&D. It'll also house their second restaurant location in a unique vegan butcher shop concept. The Rupert facility in Vancouver is actually opening in a few weeks. This is a 45,000 square foot food production facility, which is actually expected to churn out 37 million pounds of product over the next year at maximum capacity. This represents an increase of over 2,600% in expected annualized production capacity over the Mount Pleasant facility, which does about 1.4 million pounds per year. And lastly, on the US side of things, the 25,000 square foot fully built out food production facility in Patterson, California is located on the same property as a key logistics partner. At maximum production volume, the facility is capable of 98,500,000 pounds of product annually. And just doing some quick napkin math, with the Rupert facility coming online this month, it's obvious that it won't be running at full production right away. So let's just say that even if it runs at 33% production this year, even though I'm expecting more, it'll do about 12 million pounds. Very states that they sell their product between $7 to $10 per pound. So if we use $7 on the low end and only run at 33% production, that works out to about $84 million in annual revenue just out of the Rupert facility. The potential for growth is massive. Taking a look at the charts, we closed at 589 on Friday, up 1/3%. And it seems like we're finding support in the 570 to 590 range. And last Friday, March the 5th, was a great buying opportunity. And as you can tell from the long lower wick, the bulls definitely bought the dip. What's concerning to me though is the low volume these past few weeks. But the venture uplisting will definitely bring new investors on board. We could even see a rally back to the all-time highs. Now, taking a look at the weekly chart, It looks like we're trying to break out of the downtrend, so this week is key given the news. And some levels that I'm watching are 750, 890, and 950. Overall, I'm excited for VRYYF's future. With the expansion in manufacturing and distribution capabilities, along with more national retail stores adding their line, growth will be exponential leading into 2022, which is why I'm very bullish. You see what I just did there?